So training for the xBrat volume behavior. Remember, volume is just 50% of the behavioral analysis, if you like. Price action and volume together gives you a good idea of where a market's going on a particular time frame. The first thing I want to do though is talk about volume and understanding where we get this theory from. So it's standard that we have what we call volume accumulation candles. So they have more volume than the previous candles. There's more buyers and we're accumulating more shares, if you like, for stocks or more contracts. Volume distribution candles, however, are for there's more sellers. There's more volume coming in to the downside. We need to be able to measure this. But first of all, let's look at an accumulation day. Lots of volume. This is taken from a volume subchart here. And an accumulation candle is where people amass or accumulate more shares or contracts at the ask, putting in buy orders basically, compared to those putting orders in at the bid, putting in sell orders in a specified amount of time. So if it's a 5-minute candle or a 10-minute candle or an hourly candle, you need to measure the volume in that particular period of time. So we can see here at this particular time, this is the volume measurement, but the next candle has more. Okay, this is not a candle, it's just the volume measurement. So there's more volume. So this candle would be classed as an accumulation candle. That one has the same. The next one has more. The next one has even more, and then the next one is up even more. So we can see there are more buyers coming in, and the momentum is building to the upside. So we can say that if an instrument has 2 or more accumulation candles, we can see it's looking pretty strong bullish. Remember that the second accumulation candle, in this case this one here from here, has to have more volume than the previous candle, and then so on and so forth. Volume increase is steady in a trending wave to the upside. So distribution days, where we have candles where we increase that volume, you see it's actually a little bit more aggressive here. So we can see at this point, basically we are giving out, dispersing, selling our shares, if you like. So the first major point to note about distribution candles, it's related to selling. There's a lot more sells out there, okay? And the most important piece of the puzzle when looking at distribution candles, for a candle to be considered a distribution candle, the instrument not only has to end down overall, but there also has to be more volume traded than the candle before. Look at this here. Massive difference. And then again, then we come back down again, and then we increase volume and we increase volume until the next one is even more. So you can see the increase is more acute compared to accumulation days, when we have distribution days, when we have those candles that increase in volume, and that's normal behavior. We could say really that gravity takes hold, which is which is normal in the markets. Okay, so let's go and have a look at how we do that with the volume behavior. So we color in the candles. Okay, so we don't need that volume subchart. We need to be concentrating on what's happening on the chart, not looking down at the subchart there. So the first thing is a down candle that's colored in red is a distribution candle. It has more volume than the previous candle. You can see in this instance here, this is actually a bearish engulfing. The previous candle was green, and we'll go that in a minute, but this candle has even more. It's red. It's a down candle. It's a distribution candle. Lots of sellers there. A cyan colored candle, it's a down candle, but it has less volume than the previous candle. One of the things that's interesting right here is we have a rejection of the lows on this particular candle. It's a very long wick, and it closes at the highs, but it has less volume than the previous candle. So even though it's bullish engulfing, we can understand from the behavior, from the volume, that actually there's not a lot of juice in there, and as you can see, it just continued to go down after that. The next candle is a grey candle. So this is an up candle, but it has less volume than the previous candle. And then we have the green candles, which is an accumulation candle. This is the important thing here, has more volume than the previous candle. You can see this spinning top here rejected those lows, coloured in green, so it has more volume. And actually, it wasn't just a spinning top, wasn't just a rejection. It actually formed a bullish harami at this point, and then you can see the price action there. You can see the following candle is a very big candle. It was grey. Then we pulled back with lowering volume in each candle. Remember, grey is less volume than this one. Then we get a cyan, which is less volume than that one. Then we get another cyan, which is less than that. We can see that actually there's no momentum to the downside. And then we push higher. We have low volume pullbacks, and then we continue to go higher again. So it's understanding the color scheme of this. The red is a distribution candle, has more volume. There's more sellers. Cyan is a down candle, but has less volume. There's less strength in that move. A green candle is an accumulation candle. It has more volume. And then a grey candle is an up candle, but it has less volume. Getting that into your mind is very, very important to understand how, when you compare the price action, those candlestick patterns, and when you put in volume, those colours on those candles, you can really understand that behavior. So let's look at some examples. But before we do that, when not to get in a trade is very important as well. We can see here, this was a rejection of the lows, spinning top, but it's coloured in grey. So it wasn't a high volume rejection. Look what happens. We go sideways. Very, very important. Understand this behavior before you start making trading decisions. Let's go and look at some examples here. So this is a bearish engulfing on the left here. We have a really nice move up, big green candle. The next candle runs out of juice a little bit, less volume. It gaps up the next candle, the red candle, and then comes down and engulfs it, closed down here, engulfs that previous candle with more volume. Then we continue to go to the downside. On the right here, we have a bullish harami. Again, look at the behavior. We're coming down on the cyan here. We've got a big cyan candle at this point, which has less volume than the previous candle, which had less volume than the previous one. So we're running out of momentum. Then the green candle opens, it gaps up, closes at the highs, forms this bullish harami, has more volume than that previous candle, and this is the result there. Let's look at another one. So this is a bullish harami, but it's understanding the behavior previous to that. So we get a bearish engulfing here with a red candle. We get another red candle here which has more volume, but it rejects those lows. The retracement's about 50% during that candle. Then we gap up. We try the lows. It rejects the lows. It rejects the highs, and we get this this doji candle here, but it's green. It has more volume. Also bullish harami. Then we continue to go. We're getting higher highs, higher lows with these grey candles, not really giving us a massive lot of momentum, but then the green candle comes in and then we go. On the right hand side, this time is a bullish engulfing. So we have a red candle there. There's more volume than the previous candle. We gap down. Tries to go down with this little wick here. Market see value, and there's lots more buyers coming in at this point, and it closes right at the highs. It's a green candle, not a grey one. So it has more volume than that previous candle. It's a bullish engulfing, and then look at the result. So in this situation here, again, you got to look at this as a confirmation tool and understanding how the behavior is working with price action. You are going to be using signal indicators or strategies to do that. This will help you. But in this situation, I just wanted to go through where we would enter this one. Just some basics here. So as we pull up here, we've got a piercing line. Okay, we can see this move down. It goes sideways. We start to come up with these green candles. We're getting accumulations, but then we gap down on this red candle from those highs for the open. It tries to go up, rejects it, comes back down again, closes near the lows. We've got what we call a piercing line, but this is a distribution candle. So where would you enter this? Simply put, you've got to look at this pivot here. You're going to stop market order on for a sell at this point. We can see the next candle has even more volume, more sellers to the downside, and then that breaks through our entry point, if you like, stock market sell, and away you go. The last example I want to do is this time we've got a rejection of the highs, but it's a red candle. So it's still higher volume than the previous candle, even though it's not green. We did close slightly lower than the open on the candle there, but the main point about this behavior is purely that it tried to go down, the market rejected those lows on higher volume than the previous candle. Then we can see another grey candle at this point here for a confirmation. We've got a higher high, higher low. Then above this grey candle would be our entry. You can see the next candle takes us in and it just goes hell for leather all the way to the upside there. So the big takeaway from this training is understanding the colours and what it means to that behaviour of that volume, and tying it in with your knowledge of price action, because those together will give you really a good understanding of the behaviour on that time frame in the markets for your given instrument. So that's the volume behavior indicator. It's pretty simple. Just get used to those colors, understanding what they are, and it is a great tool for your trading.